Welcome to another episode of Questions, Comments, and Concerns, where we talk about topics that come up in our client meetings. Thomas and I have been covering everything from 529s and to RMDs. Today, we're going to talk about cash savings. This has become a hot topic, right? With interest rates increasing over the last 2 years, we've had a lot of clients talk about their bank accounts, which are lagging those interest rate increases, and they're just not earning much on their money market savings accounts. Thomas, tell us what we can do here with Fidelity Investments and Avidian to offer better cash returns.
That's right, Greg. As you said, bank interest rates simply have not kept up. The latest survey from Bankrate showed that the national average yield on savings accounts at banks was 0.59%. So that's the average, meaning a lot of big banks are paying way less. And so we use everything from Fidelity's money market fund, straight cash money market fund, up to short-term treasuries to manage our clients' cash savings.
And I'll tell you, there's even an in-between there, Thomas, that we've used a little bit of some of the institutional money markets. Now there's even a little bit higher yielding institutional money market at $1 million minimum, and it really is very competitive. What are some of these rates? Now, where are some of the money market rates we've been seeing in treasury rates?
Yeah, so Fidelity's money market is paying just under 5%. And short-term treasuries yielding anywhere between 5.3 to 5.5%, just depending on the term of the actual T-bill, 3 months, 6 months, 9 months.
Yes, and in what situations would we use a money market over treasury bills or treasury bonds?
Yeah, that's important, right, to understand that. This is where things can really get interesting. The time frame of the need of the cash is going to dictate how we break it down. And so something that is cash savings, that is part of someone's, like, call it a rainy day fund, you've heard it called an emergency fund, that's going to be used in a purely money market fund where it's totally liquid, meaning you can access the cash at any time. Something beyond that, more of a medium-term goal, let's say someone is saving for a new car, or saving for a house, or even doing short-term college savings that is happening in the next couple of years, that would be something where we would look at creating treasury bills, potentially even a ladder of treasury bills, and spreading those out over a number of months or even a couple of years, and managing that on an ongoing basis.
Yeah, we've really done a lot of month-to-month maturities, even out to 6 months. One thing we've even started playing around with a little bit is buying more of a bookended approach where you buy the 3 months to 6 month and then even maybe a 2 to 3 year treasury to lock in the rates in case we see rates go down in 2024. So thanks, Thomas. We appreciate it. There's, a lot of competing money markets out there. Compare and even go to your bank and ask them what their best money market rate is, and then come to Avidian and Fidelity Investments. We'll figure out if we can compete or not.